Welcome to Sterling Weekly. On Monday, the pound shed the early gains made against the broadly weaker dollar last Friday, as Britain saw unprecedentedly weak economic data and Brexit concerns weighed on the British currency. Bank of England Governor Andrew Bailey said the central bank had to be ready to do more to help. The main focus on Monday was the meeting between Boris Johnson and EU Commission President Ursula von der Leyen. On Tuesday, British labour market data was mixed as UK jobless claim rose only 528.9k more than expected, but the unemployment rate beat with 3.9%. Cable was initially helped as the sell-off in the dollar saw GBP USD back over the 126 handle, having dropped to 124.30 at the end of last week. This offered some clues as to the Bank of England's next move at its Thursday meeting this week. Traders were expecting it will expand its asset purchasing program by around 100 billion sterling pounds. Analysts reported that, in theory, QE is negative, but FX markets have generally rewarded currencies where the central bank or government have gone harder to aid the economy. The GBP-USD pair on Wednesday remained on the defensive post the UK inflation report, albeit has managed to rebound around 20 to 25 pips from the Asian session lows. The pair witnessed some follow-through selling for the second straight session on Wednesday and extended the previous day's rejection slide from the very important 200-day SMA levels just ahead of the 127 mark. The pullback was sponsored by resurgent US dollar demand amid fears over a second wave of coronavirus infections and escalating geopolitical tensions. On the other hand, the British pound failed to capitalize on its move up, led by easing concerns about a no-deal Brexit, especially after the UK and the EU agreed to intensify post-Brexit talks. The UK Prime Minister Boris Johnson added to the latest optimism and said that an outline of a deal could be reached by the end of July. The GBP-USD pair had a rather muted reaction to the latest UK inflation figures for May. In fact, the headline CPI came in line with expectations and remained flat during the reported month. Meanwhile, the yearly rate eased to 0.5% from 0.8%, matching consensus estimates, and seemed to be the only factor lending some support to the major. The Bank of England is expected to keep the benchmark rate unchanged at 0.1%, but increase the size of its quantitative easing program by at least 100 billion sterling pounds. UK Trade Minister Liz Truss said that trade deals with Australia and New Zealand are likely to boost the country's exports by $1 billion. She says, ambitious, wide-ranging free trade agreements with old friends like Australia and New Zealand are a powerful way for us to make good on the promise of Brexit. On Thursday, UK retail sales rebounded more sharply than expected for May, but the news was overshadowed by other data showing the steep rise in government debt as a result of the pandemic. Retail sales rose 12% from what will probably turn out to have been the low point of the cycle in April, well ahead of expectations. However, the Office for National Statistics said in a separate release that the national debt had exceeded 100% of GDP for the first time since 1963. The pound hit a 3-month low against the euro and a new low for the month against the dollar, with sentiment being hurt by the Bank of England's apparent reluctance to increase monetary stimulus on the BOE meeting. Though the bank increased the overall envelope for its quantitative easing purchase by £100 billion, it did indicate that the pace of bond buying will slow. GBP-USD started the week at 125.10, weekly high around 126.80, weekly low around 123.40, closing at 123.40. GBP-EUR started week at 111.24, weekly high at 112.10, weekly low at 110.20, closing at 110.40. This is this week's Sterling Weekly. Thanks for listening. We'll see you next time.